Hi La. I am a master of delay no more height from Fujian University and Chun University. The global economy is currently facing significant challenges, and many large fund managers, such as Michael Burry, have predicted a major economic recession in 2023. This has raised concerns about the stability of the real estate market and other financial sectors. In China, the government is dealing with the fallout from companies like Evergrande and Country Garden, which have left many unfinished housing projects. The government has introduced policies to ensure that these projects are completed, as housing is a critical issue for Chinese families who often invest their life savings into buying a home. If these projects are not completed, it could lead to widespread social unrest. Evergrande and Country Garden are two of the largest real estate developers in China, with thousands of projects across the country. Evergrande, for example, has around 2.4 trillion yuan in debt, while Country Garden has over 3,000 projects. The scale of the problem is enormous, with millions of home buyers at risk of not receiving their properties. This situation is not unique to China. In the United States, cities like San Francisco are also experiencing economic challenges. A building in San Francisco that sold for $300 million in 2019 was recently sold for just $60 million, a drop of 80%. This reflects a broader trend of declining property values and rising vacancy rates in commercial real estate globally. The global office vacancy rate is approaching 12.9%, close to the level seen during the 2008 financial crisis. This is partly due to the shift to remote work during the pandemic, which has reduced demand for office space. Companies like WeWork, which once symbolized the shared office trend, are now facing bankruptcy. The economic downturn is also affecting global trade, with exports from major economies like China, the US, and Germany declining significantly. This indicates a reduction in global purchasing power and economic activity. The U.S. Federal Reserve has been raising interest rates to combat inflation, but this has also increased the risk of a recession. Historically, when interest rates peak and begin to fall, it often signals the start of an economic downturn. The current cycle of rate hikes is unprecedented, and it is unclear how long the resulting economic slowdown will last. Investors are advised to be cautious and consider more conservative strategies during this period of uncertainty. In terms of investment, it is important to focus on stable assets and avoid overexposure to volatile markets. Real estate, once considered a safe investment, is now facing significant risks due to falling prices and rising interest rates. Companies that rely heavily on debt, especially in the real estate sector, are particularly vulnerable. Investors should carefully evaluate the financial health of companies before investing in their bonds or stocks. The global economy is at a critical juncture, and the decisions made by governments, central banks, and investors in the coming months will have long-lasting effects. It is essential to stay informed and adapt to the changing economic landscape to protect your financial well-being.